Good morning to you, or good afternoon, Governor.
Good afternoon.
All right, what's gone wrong? You're going to grow much slowly.
We are going to grow much slowly, but still we expect a little bit more than what the IMF forecast says. But we need to understand that last year growth was in great part due to the recovery from COVID yet. We are growing very close to potential. The labor market is posting very good numbers. The unemployment rate is low. Wages grow moderately. So we think it's a good condition for the country.
How much more work do you think the ECB has to do? You are on the Governing Council after all. So how much more work do you have to do? You know, and this isn't really, are you going to raise next month or month after, whatever. Is there much more to do?
I think we have to understand where we are right now. We did a lot in a very short period of time. Never before this happened. We did not act alone. We act globally with most central banks around the world. This generates spillovers into our action that will help us also bring inflation down. And inflation is coming down. So this is the picture right now.
Right. Very elegant way of, but not telling me how much more there is to do.
Yes, because we need more data to have a final answer to your question.
Right. But the core bit of data that you won't have, or that's going to be very difficult to quantify, is the implicit tightening as a result of tightening of bank lending, tightening of credit conditions.
But something is going on already in that front, yes. Because the tightening is with us. 350 basis points in 7 months is a lot. The monetary stance right now is one of tightening. It is making its way into inflation. Inflation came already from 10.6 in October to 6.9 in March. We expect it to be very close to 2% in the first half of 2025. This is our way.
The governor, you probably couldn't hear, you're standing to the side, but the governor of the Reserve Bank in India was saying he is pausing, not pivoting. And I think that's a key thing that, you're going to have to pause because of all that monetary policy stimulus, the timing that's in the system, but it's not a pivot.
No, but even when we pause, the tightening will be with us because the interest rate is above the neutral interest rate. So tightening will not stop when we pause.
Okay, so we now move to this nirvana with people saying cuts in interest rates. There are those who are saying we could see cuts before the end of the year. I can't say I see that.
I can't say I see that either in the Eurozone at least. I think we need to understand that overshooting is a very big risk for financial stability. We need to keep very close to the data, and the data is telling us that inflation is coming down. We did already most of our trajectory. We are very close to the terminal rate. I don't know if it's 25 basis points or 50 basis points, but we are getting very close to that.
Is it possible that we could see that this banking tightening as a result of the banking crisis is much worse than people thought, and it could actually really clobber?
We have been very careful about that. Financial stability is very important for monetary policy efficiency. So we don't see risks accumulating of the size that you are kind of asking me about. So we will continue monitoring all dimensions of.
Now, will you be going to Marrakesh in the autumn?
Yes, I will.
Great place, isn't it?
It is. So it's going to be great.
Minister, many thanks indeed. Marrakesh is where the next IMF